I'm going to show you a super duper profitable trendline break strategy that will make you massive amount of money in the forex market, right? You know, most people will be like, okay, if price is bearish or if price is bullish, you draw your trend line, and whenever you see a trend line break, you wait for a retest and do what? And you begin to buy or you begin to sell. But I'm here to tell you that that thing is just one whole load of what? Nonsense. Most of the time, it does not work. So in this video, I'm going to show you how to properly trade your trend line strategy that will actually make you massive amount of money in the market. Right now, let's get right into it. Now, this is my trading view, right? This is GBP USD, my favorite pair, GBP USD or GU per se, and it's on the 4-hour time frame. Now, if you notice, market has actually been trending down. You see, lower low, lower high, lower low, lower high, like that, like that, like that, like that, until market now reversed, right? So ideally, what we are supposed to do, draw a trend line, and whenever we notice a trend line break, you see, here is a trend line. Yeah, this is a trend line. This is a trend line. Now, let me show you why this trend line is first of all valid. This is the first touch of the trend line. First touch. This is the second touch of the trend line, right? So obviously this was supposed to be the third touch, but not. But it didn't tap the trend line. So this is actually supposed to be the third touch. But this place now, this third touch is where the main focus of this lecture is. Now, most retail traders haven't seen price. Let me zoom out. Let me zoom out so that you'll be able to see what or understand properly what I'm talking about. You see, most retail traders immediately price broke out of this place. Price broke out of this trend line, right? Then came back here. They see this obviously as a retest. They begin to buy. The price is going to move massively to the upside. But what did price do? The opposite. Price continued selling. Now here is the secret. Here is the reason why price kept on selling. Now a proof that it changed. A proof that the trend has actually reversed. The proof that the trend has actually reversed is when you spot a change of character. Right, and for this our analysis, we are using the 4-hour time. We are using the 4-hour time frame for this now. And if you notice at the initial, we said that market has actually been trending lower low, then lower high, then lower low here, then lower high, then lower low here, then lower high, then before market now tanked. Right. So invariably, you see, market is breaking structures. You see. Is a break of structure. You see, break of structure here. Break of structure again here, right? So, if you know the demand and supply strategy, other block. So, obviously, there's supposed to be another block here. Right? Then here too, because of what? They all broke what? Structures. Right? Fine. So, let me remove all these other blocks I drew here. So I usually put a line. That's what I do. I usually put a line here. So again here, this is a line. So invariably, why this trend line strategy? Why this trend line break? Why I won't see or envisage this trend line break as a change of trend is because there's not actually been, I've not seen a possible or like a clear change of character. There's not even a clear, there's no change of character here. You see, price is supposed to come up here, right? Break this previous low, higher low here. Break this previous higher low here. Then come back, pull back maybe to an order block or a Fibonacci 61.8 and 78.6 level, right? Or come back directly to this low, this other block here, then before I will now begin to buy. That is based on my strategy. But immediately we see this break here, this line I drew here, if peradventure price traded up and broke here, then I will now be certain that what the market has actually changed direction. But yet, look what happened. Market didn't do that. It came down here, haven't broke the trend line, collected people's stop, because immediately look at the psychology. Look at what happened here. Let me explain what happened here. When market came here, tapped this trend line, people started selling, placing their stop losses above here. You see, market, what did market do? Now took them out. Then when market took them out, then some say, market is now buying, market is now doing what? Then the ones that are impatient will begin to buy from here, placing their stop losses where? Here, right? Then see what market did as if you wanted to buy, came down here and took out their stop losses, right? Then there are still some also that will be patient enough to wait for a retest. You see, price did what? They retested. They took their entries from here, placing their stop losses here. Market bought a little bit and did what? Fear and tanked down. Right. So if I were to trade this pair, so long as price has not actually broken this last lower high here, I'm still bearish on this market. I'm still bearish. So the best thing I will have done to trade these is to do what? Market is trending. This is a counter trend, you see. So you see, market is trending. Remember, the overall move is what? Bearish. You see? Now see. Are you seeing an obvious change of character? You understand? Are you seeing an obvious? Immediately I see this form, I will now be ready and be like, wow, okay, this market is about to do what? It's about to sell. This is it. This is a change of character here. Then I will now wait for what? A pullback. If you watch my previous videos where I was talking about how to actually properly draw a demand and supply zone, right? This should be my demand here, my demand zone here. No, my supply zone rather. This should be my supply zone where I should be looking to take my entry. Somewhere around here. Right, somewhere around here. This should be where I should be looking at. But my first outlook will have been somewhere here using my Fibonacci retracement tool. My first outlook will have been somewhere here. Almost the same zone as that supply. That's Fibonacci 1.8 level and 78.6. This will have been where I would likely take my trade from here. Then my stop loss will always be above this last high here. My stop loss will be somewhere here. So I'm still protected. Then I'll be aiming for this very particular zone, at least here. Beneath here, that will be where my take profit should be, right? So whenever you see a trend line break in the market, that is not significant, or that is the information, the message is trying to pass is not that market has actually changed, or the trend has actually changed, or the direction of the trend has actually changed. No. Most of the time, there are other confluences that you need to package that in order to know, in order not to be stopped out, or in order not to lose money now and always in the market. Now, let me go further and show you something else. You see, market kept on trending lower low, lower high, lower low, here lower high, then lower low. All right? So this is the last order block here. This one. What am I doing? See, this is the last lower high here. Then no, this is on the last lower high. There is actually a break of structure here. Yeah, break of structure here. Then price pulled back a little bit here. You see, then there's another break of structure, although it's tiny, but it's still valid. Here, so meaning that this place. So you see, price kept on trending. There's another one here too as well, a break of structure, though tiny. I remember this is a 4 hour, but when you go down to the 1 hour, you see it clearly. So let me remove these ones. So you see it. So this is the break of structure here, right? Invariably, this becomes our supply zone, this particular zone here. So we should be expecting price to come to reverse. Anytime price comes here, price to reverse. But you know the market, and that's why you need to have an entry confirmation. Like if price gets to this place, I'll scale down to the lower time frame, which is the 15 minutes, right? 15-minute time frame to check for my possible entry confirmation. If I don't see, then I don't take the trade. So see what price did. Price came down here, then traded up, started buying. I won't take this trade. I won't take, because I will still feel that maybe market can still come here, price can still come here and still turn down. But it kept on buying. Immediately it broke here, the structure, that's when I'll be like, oh, wow. I know that this market is actually about to do what? About to start buying. And I won't even be bothered about this trend line. I will not. Immediately I see this change of character here, I don't care about this trend line. Right? I told most people who trade trend line like these days, like I won't even bother. That's my own trading style, right? So I'll just be looking for an entry possibility, right? Another block whereby I can take my entry from. And this pullback is not back to my 61.8 Fibonacci level. So I'm not taking any trade here. This is where I will actually have been expecting price to pull back for me to start looking for an opportunity to do what? To buy. But price didn't get here. So price came down here, moved up again. You see? Broke structure officially now. Officially, this is a breakout structure here. You see? Price broke structure. So, and this, the move that broke this structure started from this low from here. So, ordinarily what I will do is do what? Fib it to this place, to this high there. Then I'll do what? Where's my Fibonacci? And 61.8. You see? You see? So this is where I'll be looking to take my entry. Exactly here. I will scale down to the lower time frame and do what? And look for a possible entry position. And this how I'll have positioned it. But eventually I catch the trade somewhere around here. My stop loss has to be below this low, at least this very particular low here. Then my take profit will be here, this high. That's 3 to 1 risk to reward. So, and since price is now trending up, higher highs, higher lows, I'll just be looking for pullbacks, higher high. This one broke structure here. Then you fib from here to here. So this is not a Fibonacci retracement class. So maybe in the subsequent video, I'll talk about how to properly use your Fibonacci. But first of all, you do what? You have to actually identify or know that the trend has actually changed. Then before you start looking, applying different techniques or tools in order to know where the possible retracement will be for the likelihood of you to take your trade and make money in the market. So this is just it. And this is another video of the day in my life as a beginner forex trader. And I hope to catch you again in the next episode and in the next video. Peace out.